Okay, so I'll answer both questions very briefly. So here goes. First topic is about the role of monetary policy in promoting price stability of basic goods and services. So as mentioned by BSB on its primary objective is to promote a low and stable inflation conducive to a balanced and sustainable economic growth. All right. So monetary policy is like the government's way of managing its money and its interest rates in order to control the economy. One of its main goals is to keep the prices of essential things like food and other basic essential stuff at a stable value, as mentioned from its objective. When prices are then stable, it would then mean that they don't go up rather too quickly, which people can then afford um, what they need without struggling or make ends meet. Now, that is where the Bangko Sentral of the Pilipinas or central bank takes care of this. They control how much money is out there and use interest rates to influence how people and businesses could spend. When they do it right, prices don't tend to rise or too fast, making it easier for all of us to handle our everyday expenses. Now, off to the second topic on how monetary policy directly affects household spending. Okay, so this is also congruent to the first question. So, when the government lowers its interest rates, it's like giving us a discount when borrowing money, or rather, simplification of it. So, we're more likely to take out loans for things like buying a house, a mortgage loan, or a car loan, and other big leaps of expenses. Now, with lowered interest rates, it would also be tempting to us to use credit cards, aside from loans, of course, for buying stuff immediately, which leads to, again, more spending. Besides that, how the government handles the money supply and interest rates also affects inflation. When prices are going up quickly due to high inflation, it means our money's value is also tumbling down or going down, and we can't buy as much from it or with it. But if they balance it right away with monetary policy, just as how our central bank is doing it right now, staying afloat and just having it in a balanced position, prices then tends to stay stable, and our money keeps its value, which helps gives us a leeway on our spending abilities and keeps the economy steady. That's all.